Hey traders, welcome back to this week's weekly Forex forecast. It's the first full trading week of 2025 and we've had, the holiday period. Markets have been a little bit slow, but this should start picking up now heading into the new week. We only have one piece of data coming out this week. It is non-farm payrolls on the Friday. Nothing really else we need to pay attention to throughout the week. Now with non-farm payrolls week, very often you can see the markets in Forex being quite choppy. This is not always a bad thing. In fact, for Forex, this can be a very good thing. Why? Because Forex markets are choppy generally. And when you have news events coming up, they tend to hold their ranges because you don't see directional moves or money coming into the markets. So if you're using a fading strategy like we primarily do with GMT members, you can tend to outperform in those weeks. Breakout strategies definitely do not work very well in non-farm payrolls weeks or before big interest rate decisions or news events. So coming into this week, into 2025, you can see the dollar is sitting at the top, but we are a little bit extended both on a weekly and a daily basis. And very often, if you're going to paint the yearly candle to the upside, you would expect the dollar maybe to come back, possibly even test the 107.35. We've broken through it. I did say before December, I was looking for the dollar to consolidate underneath this level and then break through. I thought maybe in the new year, but we started to break out on FOMC. So I wouldn't be surprised to see the dollar coming back, retesting the 107.35 over the next few weeks. However, going into next week, I am bullish on the dollar. It doesn't have to come back and test here, and I am going to be prioritizing US dollar long setups heading into next week, and we're going to look at those primarily in today's video. Okay, so moving on to the portfolio selection, you can see the US dollar is sitting at the top of the ranking system in the Hedge Dash platform. So I do prefer US dollar longs as my top theme next week. We'll be looking at the US dollar to the long side in today's video versus the Japanese yen, versus the New Zealand dollar, and versus the Aussie. Those are the three currencies I prefer to the short side next week. The Swiss franc is sitting as number 2, and number 3, you could take the euro or the pound. I'm personally going to take the euro as my third currency to the long side next week. Why? Because it looks like we're getting some risk off in the stock market. Whether that continues remains to be seen. But when you get risk off in equities, you tend to see the euro outperform the pound. So for that reason, I'm going with the euro over the pound next week. But you could just as easily swap out the euro for, pound Aussie for long opportunities, look for pound New Zealand for long opportunities, pound yen for long opportunities next week. So coming into next week, primarily we're going to be looking at the dollar pairs, followed by franc yen to the upside, New Zealand franc to the downside, Aussie franc to the downside. And then we're also going to be looking at euro yen to the upside, euro New Zealand to the upside, and euro Aussie to the upside in today's video. Okay, so kicking off the watch list as we always do with crude oil. Now, crude oil is finally breaking out to the upside. In previous videos, I've been discussing the fact we've been failing to make lows, or new lows, I should say, lower lows. And this is indicative of a market that is likely to reverse. You've heard the saying, never short a dull market. This is what we're seeing. It can't go down, it can't go down. The shorts unwind their positions and you start seeing momentum to the upside. So going into this week, I do think one of the big themes of this year could be a reacceleration inflation. It looks like that, at least for now, but a year is a long time. Things can change. But certainly coming into the new year, a reacceleration inflation, natural gas higher, crude oil higher, I think these are going to be big themes that are going to be pretty talked about and discussed in the first quarter of this year. So coming into this week, I do favor long opportunities in crude oil. We are in the 4-hour chart here as always, and we're looking at the weekly range for crude oil in the Hedge Dash system. I often get asked, where do these come from? These are automatically generated in Hedge Dash. I don't draw these on. So what we're looking at here is we're looking at the first range, of course, and this is the predicted range where crude oil is expected to remain in this range next week. And if it breaches it, either to the upside where we enter the sell zone or to the downside we enter the buy zone, that's where the odds swing in our favor. And these are the setups that we go through with GMT members in real time during the week. So I'd like to see in crude oil coming into this week is, look at this momentum. There's a prior high right here. This is where we break out. We have this kind of inverse head and shoulders over here. And it would be great if we could pull back, stair step, so retest the breakout level, and at the same time breach the 71.66. That's where we enter this buy zone. And usually what I'm looking for is during the week with members, if we break down into this area, this is where I'm going to start to drop onto lower time frames. So we're looking at the 4-hour chart here, but I'll drop down to the 1 hour, the 15-minute, the 5-minute, maybe even the 1 minute, just to time or refine entries, and then looking for those double bottoms, inverse head and shoulders, the basic stuff that works over and over and over again. Doesn't need to be complicated. Your trading should be very simple. And usually, you know, you get a liquidation once you get those reversal patterns in these zones. You get a liquidation for usually 1 or 2 days. And that's what I'm looking to capture, 1 or 2 days worth of movement out of any of these markets out of 5 days. So if we do trade below the 71.66, that's the first place. I'm going to be really primarily looking for a 1 or 2 day reversal to the upside in crude oil. I cannot sell crude oil next week. I can only buy it. I can only be a buyer of this market. If, as a kind of backup or an emergency plan for risk management, if we break through here, let's say I buy a double bottom over here and the market fails to reverse and it comes all the way down to the gold level. This is the second place I'd be looking to step in to buy and to cost average that first position, because very often you breach the second levels here, so the bigger range where we become extremely overbought or extremely oversold. This is where you also get a 1 or 2 day liquidation, generally speaking, from below or above these gold levels. So those are the two setups in terms of fading that I'm going to be looking for next week. The other thing is you can get a fast market. Not every market is going to test its upper or lower bound. In this case, you can look for crude oil to pull back, breach the moving average, kind of consolidates, and then you get a run up in momentum. Pulls back, tests. Notice how, look, it breaks through the moving average, comes back and tests it, and then the moving average follows it, and that sets up your bull flag setup intra-week into the 76.47. Of course, commodities are much better for intra-week breakouts than Forex because they're more volatile. So breakout strategies work very good on volatile markets like commodities. Fading strategies tend to work much better with Forex markets, which are low volatility, and that's why we look at the setups we do, not just in this video, but also in the week with members. Okay, so kicking off the dollar pairs with US dollar, Japanese yen coming into next week. You can see this has just been consolidating and it's just been getting tighter and tighter and tighter. And this is because, of course, we had the Christmas period and the holiday period. Now coming into, you know, the start of 2025, first full week back, we're going to likely, possibly after non-farm payroll, so probably going into the following week, we're probably going to see some volatility coming into this now. What I would personally like to see is I would like to see US dollar yen pulling all the way back next week into the buy zone down here, which is below the 154.97. Once we breach that, we become oversold during the week. And this is where I'm going to be looking for those bullish reversal patterns for a 1 or 2 day liquidation. If we break through there, and again, let's say I buy it somewhere down here and it moves against me, takes out the 152.65. It doesn't often take out the gold levels. They're quite rare. But if it does, this is a second place. You can look for a 1 or 2 day reversal to the upside, whether I'm already long from over here and cost averaging it, or sometimes it takes out the gold level. I don't have an initial position, and these are fantastic opportunities for initial positions. Third and final thing is you can see it's already down below its moving average, so you could look for the break out of this. Usually moves, you know, a half, maybe even 2/3 of the way towards the target. Then you get the correction back to the moving average, and that sets up your bull flag next week into the sell zone. So again, if you buy it intra-week, you know, where you book in profits in the sell zone, which is above the 159.62. We start to trade into there. The odds of it going much higher throughout the week are diminished. So it's a great profit-taking opportunity in US dollar yen. Next is New Zealand dollar. Now, I'm only interested in shorting this market. I cannot buy this market next week. And you can see this market is selling off. We've got a nice trend to the downside. We're below the moving average as well. So this thing is trending to the downside. What I would like to see is a correction, a pullback. That's what sets up a really nice opportunity to fade things. And by fading, I mean you see momentum in one direction and then you use that to take the opposite position. For example, this has momentum to the upside, breaks the 0.5693, and then I'm looking to step in and fade that momentum. Why? Because, you know, momentum counter trend doesn't hold usually unless you're getting a reversal. Sometimes you have reversal weeks, but they don't happen that often. So if we can get the market pulling back, breaching the 0.5693, we enter the sell zone. Above this level is where I'm going to start to look for bearish reversal patterns, double tops, head and shoulder patterns for a 1 or 2 day reversal to the downside. If we make our way through there and we get to the 0.5775, if we breach this, we become extremely overbought during the week. And again, this would probably be signaling some kind of reversal, which we're not expecting. So it's unlikely that's going to happen, but above there is the second place, whether I'm already short and risk managing, or if this is a new position, the second place I'll be looking for a 1 or 2 day reversal. And the third and final thing is, you know, we're already below the moving average. I would look for this to break above it, because then you know you're in a consolidation like it does over here. And then you get the consolidation breakout with momentum, and it should be clear. You should really, momentum to the downside when you're breaking this should be very clear. It won't be like this because this was a news event, but this is what, you should be able to pick it out cleanly with your eye. So if this pulls back into the moving average, that first retest of the moving average sets up a nice bear flag opportunity into the 0.5530. Below there is where we have a nice profit taking zone or profit taking target to the downside in New Zealand dollar. Next is Aussie dollar. Again, I can either short this or do nothing. Buying this market is not an option for me next week. You can see we're lacking volatility. Volatility drying up over the Christmas period. So I'd like to see some volatility straight off the bat. That would be great. We start to snap higher and then we pull into the 0.6306. This is the sell zone next week. So we start to trade into here. This is where we start to run out of runway to the upside during the week, as it were. And so this is where I'm going to be dropping down and looking for bearish reversal patterns back inside the range, 1 or 2 day reversal. Sometimes, if it tests very deeply and you get involved over here, you might not come back into the range. You might just come back down here. But if you get a 1 or 2 day reversal out of it, fantastic. Move on to something else. That's pretty much the best you can hope for a reversal. Unless you're going to get a major reversal for 3, 4, 5 days, but they don't happen very often. But 1 or 2 day reversals, they happen every single week. So the second thing is, if we break all the way through here and we take out the 0.6397, although this is not expected to happen, if it does happen, it provides a second place, whether I'm already short or not, for a 1 or 2 day reversal to the downside. And the third and final thing, of course, is we start to break up. We fail to take out the upper bound. Instead, you get the reversal back in the direction of the trend. And that sets up your bear flag setup into the moving average down to the 0.6123. Again, with non-farm payrolls later on in the week, not always, but a lot of the time, the markets are kind of constricted and choppy. So, fading strategies tend to be a better go-to in the kind of non-farm payrolls week because the markets tend to chop around leading into non-farm payrolls. And that's true for not just the dollar pairs, but all of the Forex pairs. And the final dollar pair we're going to look at is euro dollar. Now, this is not my favorite dollar pair. We've just looked at my 3 favorite dollar pairs, but euro dollar to the downside is something I would be interested in, or at least looking for short opportunities. Euro dollar might push higher next week above the 1.0435, but I'll still be looking to short it. So what this tells us is, the dollar pairs are the standout pairs probably over the next even month or so. And this is because we've got a stronger euro and we've got a stronger dollar. But when you look at the euro paired with the euro is significantly underperforming. So we cover euro dollar every week. I prefer the other 3 dollar pairs. However, a couple of things here. You can see we did have the big sell-off over the kind of Christmas period. I would not be surprised because of this to see this kind of testing the moving average and moving away. However, reactively, because we can't predict the future, so we want to have set plays regardless of what happens, and then we can capitalize on them as they happen in real time. What I'd like to see is if we can pull back and breach the 1.0435. What I do like about this is we have 2 highs over here. So I like it when we get into this kind of sell zone and then we test resistance. Those are some of the best setups. So I will be looking for a 1 or 2 day reversal from this area if we can pull back and test it. It's unlikely to do this. In fact, it's extremely unlikely to do this. But if on the off chance some major catalyst came out and we ended up taking out the 1.05618, this would be the second place above this level. That the odds swing even further in our favor for a reversal, and it's why I would take a second position, even if I'm short, to cost average it, or if I'm not involved in initial position. And the third and final thing, as I said, we've got this kind of bear flag setting up already. We've got the kind of flag pole here, and we're kind of chopping back. So I would not be surprised to see this pull back, test the moving average, and then break down again in the direction of the trend. And then you get your pullback. Usually each week when you get that pullback, you get another bear flag. So we 1 bear flag into a second bear flag down to the 1.0182. Okay, so moving on to the Swiss franc long theme. And the first currency we're going to look at, the Swiss franc against is the Japanese yen. We are starting to break lower. However, this is just chopping around. I do favor on balance long setups in franc yen. What I would like to see then is I would like to see franc yen coming down and breaching the 170.83. You can see we've got some lows down here. We also have another low down here. If we breach this, especially if we run into this low, this is a good one. We're kind of deep in the buy zone. We test this support area down here. This is where I'd be looking for bullish reversal patterns for a 1 or 2 day reversal. If we were to come all the way down as a backup plan and we take out the 168.53, not likely to happen, but if we do, especially if we break through there and we start to take out these lows, that's going to be the second place. I'm going to drop down to lower time frames, look for a 1 or 2 day reversal, even if I'm already short here and it's moved against me and I'm just trying to risk manage this, cost averaging it for a break even. Usually I get break even, not always, but often if I have an initial losing position and I buy it again or I sell it again above or below these gold levels, usually with members during the week we get mostly a break even or a small loss at the very least. That's the goal. That's the plan of using these gold levels as well. So the third and final thing is we're already starting to break down below the moving average. So what you can see is you can see this breaking higher. And in this case, for the 4 hours, just intra-week bisecting the week, have a 30 period moving average. You can use a 20 period, it doesn't really matter. But if you have a 20, 30 period moving average, look for the break back above it and you start to consolidate into the moving average. That first move away back into the top of the range here at the 175.42. That'd be a great profit taking zone next week for franc yen. Next is New Zealand franc. I can only be short or do nothing. I cannot buy this market next week. We are trending down. You can see we're chopping around here. This is the previous high from this kind of bear flag setup. Now, could break out during the week, could come all the way back up and retest the high. Now, what I would like to see is I'd personally like to see this coming back, retesting the prior high over here because we breached the 0.5164. We become overbought during the week. So we enter the sell zone for the week. Now, if we enter this sell zone and we take out this key area resistance, it's going to be a great place to start to drop down and look for that 1 or 2 day liquidation because now you've got confidence. You're entering into an area on the chart next week above the 0.5164 where the odds are that you're going to reverse anyway with or without a key area resistance. And once you do it, if you take out this, that increases those odds even more. If we break all the way through as just really a kind of backup plan, it's not expected, but if we do take out the 0.5229 and I'm already involved in a short, this would be the second place. I'll be looking to add to that position and look for a reversal. And when I add to a position, I always add with the same position size as the previous one. You should never really scale up your additional positions. Some people won't add to their trades anyway, but if you are, especially if you're fading markets, it's not a good idea to increase the amount of risk you take as you add a second position. You should just add the same amount as the first position because otherwise you're martingale-ing it, basically, the martingale strategy, and that's shown to blow up over time. The third and final thing is we're already pulling back, and again, this just could be a big bear flag that breaks to the downside. If that's the case, you know, look for this to start to make its way higher, and then you'll see it break back down below the moving average. Breaks back down, pulls back, and that first move away sets up a really nice inch-week bear flag setup. So that would be the third thing you could look for during the week next week, down to not just the buy zone, where if you're short you can book profits, but also trading into the prior low. If this breaks lower next week, you should expect this to take out the prior low. And the final franc pair is Aussie franc. Now again, we have a very similar setup because they're very similar pairs, but we've got this kind of bear flag. But the New Zealand franc, you can see, has a bit more momentum to the downside, and actually I would prioritize that over Aussie franc. However, what I'd like to see is I'd like to see this pulling back. Now, if we do pull back and we breach the 0.5720, we're retesting the breakout of this low over here. You can see we sold off, we tested it once, consolidated. I mean, the opposite of what we saw with the DXY. Do you remember? DXY hits it, consolidates underneath it, and then breaks. Whenever you see that, you test it and you consolidate, you should expect a potential breakthrough. Usually on reversals, you know, it hits this and it starts to reverse straight away. If you get a test and a consolidation, you should be very wary, you know, of that support level or resistance level breaking. So what I'd like to see is I'd like to see it enter the sell zone, which is above the 0.5720. And this is where I'd start to drop down, probably, you know, almost immediately, because we'll be running into this. This is where I'd be starting to look for bearish reversal patterns for a 1 or 2 day liquidation to the downside. If we were to blast through that, that would be very surprising. No one is really expecting it to happen, certainly not the market, because these are in an area where they shouldn't really be hit. And if they are hit, it's usually a bigger reversal. But that would be the second place. I'd be looking for a 1 or 2 day reversal from above the 0.5795. We become extremely overbought during the week if we take out this level. And the third and final thing, we're already breaking up again. This could just be a big bear flag which breaks out. And if it does, what you'll see is it will break with momentum, and then the moving average follows it. You know, if you've had a trend line on like this, a channel, some people like channels, it would be a break of that channel pullback, but it would pull back and hug the moving average. And that move away down to the prior low, which sits in the buy zone next week, would be a fantastic profit taking opportunity for any intra-week shorts in Aussie franc. Okay, so wrapping up the Forex universe with the Euro pairs, starting with Euro Yen, and then we're going to move on to gold and silver. Now, going into next week, something I should add is, don't forget, if you are trading the Yen pairs, you are essentially, from what we're looking at in today's video, we're looking to potentially short the Yen, which is a risk-off currency. So if we start to get real risk-off coming into equities, and what that means is you start to see stocks selling off quite hard, you might want to avoid shorting the Yen. Okay, so we're working on the assumption that equities are going to be pretty benign. You know, maybe they go up, maybe they go down. But either way, what they're not doing is selling off hard. They start to sell off hard, you can see money coming into the Japanese yen. This is why even if you're a Forex trader, you have to pay attention to what's going on in stocks. You know, if you're trading stocks, you have to pay attention to what's going on in Forex, because how currencies move affects the indices. So just bear that in mind if you are looking short the yen. If you start to see stocks selling off hard, filter out Japanese yen shorts. So what I'd like to see is I'd like to see Euro yen coming down, taking out the prior low here, entering the buy zone, which is between the 159.74 and the 157.34. This is where next week I'm going to start to look to see if we can get 1 or 2 day reversal to the upside. If we breach all the way down and we take out the 157.34, this is where we become extremely oversold during the week. Now, if that happens, what that would tell you is likely this large consolidation we've been in with the euro-yen pair has broken. You know, this would be abnormal momentum to the downside, and that would probably be a one wave. Anytime you test these, very often they become one waves or breakouts. And then you get, you know, the pullback, probably test the upper bound maybe next week or the week after, and that becomes a second wave, and then you break down for a third. So those are the two places I'd be looking to fade any momentum to the downside next week. And the third and final thing, of course, is we're already down below the moving average. You know, you can look for that intra-week breakout. The yen pairs tend to work better because they're more volatile for intra-week breakouts. But if we do break above the moving average, you can look for the reversal back down in the direction of the trend. And then, of course, that pullback into the moving average. And you can look for the sell-off down. Let me just clean this up a little bit. Pull back, breach the moving average. Sell off. First test or first pullback into the moving average down into the buy zone of the 159.74. So again, if you're short, the only way to book your profits is to buy back what you've shorted. Next is Euro New Zealand. Now, I'm only looking to be a buyer of Euro New Zealand. We kind of broke this, a little bit of a head and shoulders because we failed to make a high over here. But what I'd like to see is I'd like to see this come down next week. Take out the 1.81617. We enter the buy zone. And we've got multiple lows. There's one here. If we breach this, we could take out this low in the buy zone. Both of these would be great places to start to look next week for reversal. So look for momentum to fade, you know, drop down to the lower time frames, and you should see momentum start to get choppy. And then you get your patterns, and then as they unwind, you start to see a reversal. Just as we looked at the beginning of the video in crude oil. You notice in crude oil, it's doing this, it lacks momentum, and then you get the big reversal to the upside. That's exactly what we're looking at throughout the week with members, but just on a lower time frame. So we're just looking at it, you know, to happen on 5, 15-minute time frames. And then that translates into 1 or 2 days worth of movement. But in crude oil, I mean, you could see this liquidate, you know, for months, because we're looking at, you know, a monthly consolidation. But it's the same principle. What happens in the bigger time frames happens in the smaller time frames. So if we take out this level, that's the first place I'll be looking for a buying opportunity for a 1 or 2 day reversal in Euro New Zealand next week. If we blast through here, take out the 17955, not expected to happen. But if it does, especially if I'm already long, I'd be looking to risk manage this with a second position for 1 or 2 day reversal to the upside. And the third and final thing is if we start to break back above the moving average and it turns and follows, you can look for that tight consolidation, bull flag setup into the sell zone, which is above the 1.8574 next week. Again, if we start to see, not saying it's going to happen, but if we start to see stocks selling off quite hard at any point, Euro Aussie, Euro New Zealand, these are markets that should outperform to the upside. So you can filter the Japanese yen shorts, and you can go into certainly the dollar pairs. Dollar long theme should work, Swiss franc long theme should work, and Euro New Zealand, Euro Aussie, pound Aussie, even pound New Zealand to the upside should also work if you start to see stock selling off quite a bit next week. And last but not least, we have EurUsd. Again, I can either be a buyer or do nothing. I cannot sell this market next week. What I'd like to see is I'd like to see this pull back. There are two lows right here. These would be great places. These two lows within the buy zone. These would be great places to start to look for potential long opportunities next week. So if we sell off and we come all the way down, we take out these lows, that's going to be great to start to look for a 1 or 2 day reversal to the upside in EurAusd. If we blast through there, I mean, again, you'd need some sort of catalyst. We don't really have catalyst next week. The only thing we've got is non-farm payrolls on Friday. And what that tends to do is constrict and reduce volatility during the week. So I don't expect it to take out this gold level, but if it does, as a backup plan, this would be the second place. Whether I'm long from up here or not, that would be looking for 1 or 2 day reversal. And the third and final thing, as we move down, you could look for that break back above with momentum. It should be clear. Momentum should be something you can see very easily. Like here, we break up 1, 2, 3 candles straight to the upside, then a tight consolidation. You look for that, moving average follows it, consolidates into it and moves away. The prior high would be the profit taking target. It sits right in the sell zone, and also, prior highs, once you get pullback, should also be taken out as well. So above the 1.6776 prior high in the sell zone would be great profit taking opportunity for any intra-week longs in EurAusd next week. Okay, so wrapping up the video as always with gold and silver, and we looked earlier on at the quantitative data in HedgeDash, and it's showing us, relatively speaking, we should be looking at long opportunities in the US dollar. Now, if we're going to get relative outperformance of the US dollar, in all likelihood, what does that mean? It's going to be a headwind for gold and silver, and it's no surprise or coincidence that we've started to see gold top out as we've seen the dollar rallying and silver suffering. Now, out of the two, I prefer to short silver. Silver tends to suffer the most. You can see gold going up at the same time as the dollar, but even if it does, if you've got a stronger dollar, it tends to be a headwind, and the up moves tend to be restricted. Gold really outperforms when the dollar's selling off. So going into next week, I can only really look for short opportunities in these markets. If we see gold breaching the 2687, this is where I'm going to drop down to the lower time frames, and it looks like this. In the 4 hours, it might just look like one move up, and then you start to get a couple of candles here, and on the lower time frames, you're looking at this. Pushes up, you're starting to chop around, and then maybe you get a break like this. That is what I'm going to be looking for a 1 or 2 day liquidation back inside the range. Again, out of gold and silver, I prefer silver, and out of Forex and gold and silver, I prefer the Forex setups next week. But if we do enter into this sell zone, I will be looking for short opportunity. If we take out the 2734.51, you would have to think something very significant has happened to the dollar. We've had a massive reversal. So if we do take this out, as unexpected as it is, just as a backup plan, this would be the second place to look for 1 or 2 day liquidation back inside the bigger range. And the third and final thing is we're already above the moving average, so you can look for that intra-week breakout. And again, very much like I was talking at the beginning of the video, if you're looking for intra-week breakouts, commodities like crude oil, gold, silver, I mean, these do tend to outperform on breakouts. You tend to have really nice breakout setups in commodities. So you can look for that breakout down to the buy zone, which is the 2591.97, and we've got a prior low sitting right in this. Always a great profit taking target, which I'll be highlighting in these videos whenever I see them. And last but not least, we have silver. It's a short or do nothing for me next week. I cannot buy this market. What I want to see is, as always, I want to see it pushing into the sell zone. Where is the sell zone next week? Above the 30.59. And I'm looking, there's a high here. There's a low over here. I mean, both of these would be areas of confluence I'd be looking at if we can start to trade above the 30.59. Somewhere between this high and this low, we should kind of hold this really, because if we break through there, we could pull back and retest them and bounce to the second upper bound. But again, that's unlikely to happen. So if we do push through here, look for this high, look for this low, and start to look for your bearish reversal patterns to the downside from 1 or 2 day liquidation back inside the range. If we blast all the way through for whatever reason, not expected to happen, this actually sits right at the breakout of this double top over here. And again, you're looking at this double top on a 4 hour time frame. Now imagine you're dropping down to the 5 minute, the 15 minute intra-week, and you're seeing this, but in the 5 minutes, and then you get this reversal. That's what I'm talking about. You break into the sell zone, and then you start to see something like this on the lower time frames, and then you get the reversal like this. So that would be the second place. Above the 31.57, we become extremely overbought during the week. That would be the second place that would be looking for a potential short opportunity. And the third and final thing, as always, especially with silver, because it's quite volatile, is if you get the breakout below the moving average, you can look for the pullback into it, that bear flag setup, down to the prior low and then onto the 28.62. That's where we enter the buy zone next week for any profit taking opportunities on any intra-week shorts in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting edge hedge-platform is included with every GMT membership.